Good afternoon, Cashflow builders. Welcome to a live on Facebook Live with Building Cashflow in the Know. And I know it's been just a couple of days since I did my last live, but I just got to do one today after looking at the market. And these are conversations with myself every day about the chart, so that I can understand a little more about investor sentiment to help me make decisions to stay out or to get back in the market, right? Like especially over the past 5 months, the trending downwards of a lot of securities in the market. This is not financial advice that I'm sharing here. And if you are also having conversations with yourself about the charts, a little more, technical analysis, that you prefer that, and there are things that that you know of that I do not, please come forward and share with me as well. So without further ado, let's get started. And so very, very green day yesterday. Very nicely, very nice green. S&P 500 almost 2%. The small cap S&P 600 and 400 just slightly below that. And all sectors over here, all green, beautiful green, right? And I always like to turn to the volatility index first. So finally, volatility index has fallen below the 30-point mark, and um, hopefully it falls to 20 and below. That's something that I look forward to, as well as it's you know e- because usually when it goes below 20 points is when we start to see securities rallying upward. And of course, looking why look at volatility index is to get an idea of um, the volume of put options that are in the market, because the larger number of put options in the market is a strong indicator that investors are worried about market plunging, right? Because they use the put options to insure their investments against market plunges. So, something's happening to my left. I'm at the CrossFit Exchange today, having a cup of coffee. I'm feeling quite sleepy after a long day. And I another course coming out at 3:30. To further understand about the market, how to have conversations with different investment instruments. So let's look next at so over the past week, right? What's been surprising has been the Chinese, the CQQQ, the Chinese security, where there were signs of very strong confidence by investors uh, in the Chinese market, and we saw securities going upwards. And of course, the question was, will the rally last, right? There was also an announcement last Wednesday at a trade summit by President Xi that he recognizes foreign companies in China has come to a halt over the past uh, years, and that he wants to there's a commitment to open doors to uh, the wider market again. So looking at, of course, when we see the volatility index falling, right, it's an indicator that the volume of put options in the market has fallen. We also want to know that um, while the volume of put options fall, we want to know that the volume of call options are going up, because we want to have a stronger, you know, perhaps I can say proof that there's a growing confidence in investors about the market, right? So what we are seeing here in the call put ratio is a very steep red line downward, which is definitely an indicator that there's more call options in the market. That there's a very huge increase in the volume of call options in the market. So when there's a huge increase of call options in the market and a reduction in the volume of put options, we usually see a very steep red line over here. So yeah, that's a further indicator that there's an increase in confidence about the market. So let's look at some securities. Let's look at this triple Q. We have in triple Q where the large cap and technology companies are in the US. So the triple Q is a very good indicator of its performance. So yes, we have been seeing a downtrend to the triple Q over the past 5 months, and till last Saturday, it traded. I mean, it ended low, although it wasn't a new low. Yet we are seeing somewhat of a U-turn over here. Very good, 1.6% increase to the triple Q. Let's look at T triple Q, whether the confidence in the Chinese market is still there. So the confidence in the Chinese market is still very strong ever since 9th of May. There was a slight um, drop over here, but then we see an increase, and that we're not seeing any new lower lows yet, ever since like 18th of May. It looks like it's able to sustain. And oh, one more thing to take note of, right, is that the blue line here is the 50-day moving average. And one of the things that investors like to look out for would be the price of the security, especially in a market like a bear market, right? The price of the security crossing the short-term moving average once more, and that usually gives investors very strong confidence in the security, as in to either buy more, or confidence, or maybe even comfort to buy more or to stay invested, because that's also what is important, that is investors staying invested, not just paper handling all the way, which is what which can cause the price of the security to stay below its short-term moving average. So let's look a little bit at Europe. So we will see that there is also growing confidence in the Europe market, as well as what about Asia? So Asia confidence in Asia is also growing. Um, that's probably the reason why China, um, the confidence in China did not plunge too quickly as well. Because usually when at this point in time, like, we have to keep in mind that the volume of margin trading has been reducing drastically ever since last year October. It has the volume of margin or borrowed money to buy stocks has reduced from 935 billion to 772 billion in just a span of half a year, right? Um, so it could be we could a cautious trader will be making assumptions that when we see growing confidence like this, investors may take it as an opportunity to um, take profits so that they can help to pay off their margin, while the Fed or Jerome Powell, right, is about to announce more about the rate hike, come 14, 15 of June, where the federal government has its meeting once more. So, after seeing all this, um, seeing all this positivity, this confidence, right? If you're considering, entering, please be cautious. Please be patient. Rest assured there will be more discounts coming, along the way. So if you can, and you're a bit more patient, please dollar cost average. So yeah, that's it for me for today. Or I mean, like, what else is giving something else that's giving the confidence would be very strong rally by the banks, Bank of America, as well as the big tech companies, right? Microsoft, uh, also having good recovery. So that's probably what's giving investors confidence at this point in time. But we still have to take note of something, which is looking at the percentage of companies in the New York Stock Exchange, right, that have their stock price above their 50-day moving average is still at 21%, which is very, very low. And the percentage of companies with their stock prices above their 200-day moving average is 25%, right? So um, to have a couple of to have a small number of these companies doing well may not be sustainable in the long run, with regards to seeing a rally in the market, right? So please be patient. Please dollar cost average, and at the same time continue to raise more cash. So once again, thank you for joining me on this live session, and I'll see you in the next one. Thank you very much. Bye. Oh, stay safe, stay invested. Bye bye.